Is the United States going broke? That's a good question. All these talks about debt ceiling, does it really matter? Is it something that's going to be a concern for us in the future? That's what I want to address today. I really want to address what's going on and really what could be the possible outcome of what's going on right now. Even getting towards the final week of May now, we've got all kinds of drama going on between the Republicans and the White House and what's going on. Republicans say we don't want to raise the debt limit. White House says we've got to raise it. In fact, even the Treasury Secretary, Janet Yellen, says we got to make it unlimited. Take the cap off, make it unlimited spending. Well, why does that matter to us so much? First and foremost, understand that what Republicans are trying to do, they're trying to be staunch again. They did this 10 years ago, ironically, when Biden was actually a vice president. The Republicans pushed and they shoved. And the next thing you know, they were avoided raising the debt ceiling for that period of time. Biden saw that happen to Obama. He saw him get bullied to the point where they said, fine, we'll stop spending as much. And they did. Well, we're getting to the same crisis today. They want to raise the debt limit even more, at least $1.5 trillion, but they want to keep it going up, right? That's just a temporary band-aid. Because in truth, the United States is spending more than it's earning. This is very similar to what you're experiencing right now if you're dealing with inflation. Maybe you were already paycheck to paycheck before, and now you're realizing you can't hardly make ends meet. In fact, you're probably spending more than you thought you were, or maybe you're spending more than what you wanted. And as a result, what happens? You start depleting all your savings. And when you're out of savings, you go to credit cards, right? You go to your debt. Now, what if the bank finally says, hey, your debt limit, your credit card limit's at this much amount. And you know what? We're not going to raise it anymore. And you've been banking on it, literally banking on that money being there and hoping that they'll keep raising your credit limit as it goes along. What if all of a sudden the credit card company says no more? You're going to say, well, how do I pay my bills, right? That's exactly what's happening in the United States. They have bills coming out all the time. A lot of those bills are actually paying for people paying the interest rates. Really, and just so you know, there's a lot of talk about China taking over the world. China is actually not the number one debtor. They're not the ones that hold most of our debt. Japan has more than China has. The United Kingdom, England, and they actually have almost as much as China has. So it's not that China holds all of our debt. In fact, the US holds most of the debt, and it's usually held within banks. Banks hold our debt, just like do for us on a personal level. Banks hold our debt. So if we can't make those payments, if we can't make those things work, those people that buy treasuries, they're called US treasuries, and that's even investors. These are even people like you. If you have mutual funds, you might even have mutual funds that have money in treasuries, which is government-backed debt, especially when it's dealing with bonds and things like that. Well, if the government can't make the payments, that means you don't get paid. Things start to crash. As a result, the government has to stop spending money. The reason that the Republicans are being so staunch, and I'm not saying whether I agree with this or not, I think it's kind of dumb on both sides what's going on. But the Republicans are just saying, no more. We're holding to the line, heck or high water, to put it a little bit more PG for you, right? They do not want this to go up. They want it to stay the same. And the truth is, with inflation, that's pretty dang hard to do. And with rising interest rates that have been going up, that's also become hard to do for the US government. So just like you with your credit cards, you're seeing the interest rate go up, your minimum payments are going up, you might even be seeing all your other living costs going up. It makes it hard for you to be able to make your payments. Well, what would you do? You'd probably have to start picking and choosing, because either one, you got to raise the money you're making, your income, somehow get a raise, right? Or two, the other option is you figure out who you're going to pay and who you're not going to pay, or maybe just stop spending in general. The US government, their only revenue source is really taxing us, right? Now, there are ways that the government could do more. They could sell off land. They could actually sell off a lot of the holdings that they have. But the government, usually when it comes to money, aren't that smart. They just want to keep spending more. And ironically, it's the Congress who are also fighting. Certain members of Congress are fighting against raising the limits. It's Congress that actually approves how much the government spends. So as we see the government spending more money and as interest rates keep rising on them as well, they have a hard time meeting these obligations. And if they don't meet these obligations, it's hard to say exactly what will happen, because even Janet Yellen says, nope, we're going to keep paying. Well, the government doesn't get paid their taxes for the quarterly tax till June 15th. They're saying you're going to run out of money on June 1st. Well, which is it? Does that mean that they're going to delay payments? Or they got to pay on time? Will they pay out and then their check bounces? It's hard to say what will happen exactly. But we do know there's going to be a gap there. And even if they get the money on June 15th from the quarterly taxes from corporations being paid, still, that doesn't mean it's going to keep them going throughout the summer. We could be in some big trouble. That could mean government layoffs. That could mean they start laying off military personnel. It could mean that they're starting to lay off government workers, IRS agents, which they just hired a whole bunch of. By the way, IRS, that's the only way they can get more money. Maybe they hire more IRS agents to collect more of your taxes. The Republicans don't want higher tax rates. They want to keep them down, especially as our costs are already going up. The American people kind of agree with that. But the problem is the government hasn't figured out how to curb their spending. They don't know how to do it. They've always had this unlimited credit. And in fact, that's what they want to go to. They've had limits, but they've always been able to bump it up. Now we're at that point. What do? Worst case scenario, what could happen is you could see major crashes. Credit tightens up. Banks don't have money. If they're not getting paid, they don't have money, which means they don't have money to lend to you. Everything freezes up. And if things freeze up at the bank level, that also means the economy collapses. Good news for you. That means that, well, at least they won't have to keep raising interest rates on you because the banks are going to say, well, we're not lending money anyways. Raising interest rates won't do as much good. They might have to start lowering rates, right? The feds might stop raising the rates at that point. But that also accomplishes the thing the feds have been talking about, which is they want to see more unemployment. It's very possible we could see millions of people unemployed if there's no agreement reached about this debt ceiling. What also could happen is if you have money in the stock market, that could come crashing down hard. The stock market, by the way, is already overvalued about double what it should be right now. It's already about double the price that it should be. So it would come back, sadly, into balance if things started to default. But that's not good for you, especially if you are retired right now and you're counting on that money that's in the market, or you're hoping to retire in the next couple decades. This could be a major setback for you. My warning to you is you may want to debate about where you're holding your money right now. You may not want that money in the markets, right? You may want to have it being held safely. Here's what's ironic though. In times like these, when there have been crises, financial crises like this, like in the last crisis, guess what the government did? They actually made more money. More people actually went and bought more treasuries, even when we had the crisis in the United States that we essentially caused, right? We caused that crisis, that financial crisis. Yet more people still, for safety, went into treasuries, which is exactly what the government has as debt, right? That's what we're paying on as debt. So it might actually help the government temporarily when you start to hear crisis because people flee for safety and they've always gone to the US dollar. And just so you know, the whole talk about the Chinese yuan, that actually being the normal currency, no, nobody wants it. I mean, the euro is much more likely to become the currency than the dollar. And even the euro, when you really come back to how they could pay their own bills, they have a hard enough time as it is. So everybody's looking to US as being the safe place, the place that has the full-fledged backing of the US security and the Treasury Department, right? Well, that may not be the case. I think at some point there's going to be some agreement reached. Even if it means there's no debt ceiling, there's going to have to be spending cuts. Even though they've already agreed to do some spending, that might mean that Congress is going to have to go back to work to figure out how they're going to cut spending too. It kind of puts the White House in a pickle, but that's what happens. And so I personally think that debt ceilings will naturally have to go up over time just because of inflation. I don't say that. I'm not saying that's right. I'm not saying that it's not fiscally irresponsible because it is. The truth is, at some point, we have to come into balance. But just like you, and just like in your life, even if you somebody's starting off as a newlywed in life, you're going to have more debt than your parents had just because of inflation. So that's the thing. The debt ceiling, in a lot of ways, does have to increase. The question is, how fast does it have to increase? Does it really have to be as crazy as what it's been? I don't think so. I think that there's some merit to having these spending cuts. But for you and for your money, this could be dangerous, even if they start to default. And that's the worst case scenario. I don't think the US government will try to default. They'll probably have to make cuts, is what they'll have to do. They'll have to do exactly what the Republicans bullied them. And don't be surprised if they try to get revenge later on that happens. Again, it's petty, it's dumb, and it affects us more than it affects them. But I'm here to say that if you're going to be having anything for safety, buy real assets and buy assets specifically that make you money, that cash flow, that pay you income. Do not just buy assets hoping for them to appreciate. If things really do get that bad, it's very possible real estate values could come down as well. It's possible, heck, prices could come back, crashing back down as well. That happened in the Great Depression, right? We saw deflation happen. The government doesn't want that, and neither do the Federal Reserve or the bankers, but it could happen. The truth is, I really don't know, right? None of us really know what could happen completely, but it is something to be concerned about. It is something to really be concerned that the U.S. can barely make their payments even today, even before we're getting to this deadline they're talking about of June 1st. They're already having a hard time paying their bills. When is that going to stop? This is where it comes to us. How are we going to be responsible? Who are we going to vote in to the Congress, and into political offices like this to be responsible, to be wise? We need more fiscal responsibility. There's no doubt. But I'm telling you, it's affecting us as Americans the most. And the best thing you can do is be safe. Now, I'm not saying go buy Chinese currencies, obviously. I'm not saying buy euro. But what I am saying is You got to make sure that you have real assets and that your spending and your financial life is responsible right now. If you're just like the US, you're running up your credit cards right now, get it under control. Find ways to produce more income and just have a good emergency fund set aside. Have good money in savings. Yes, even if we default on debt, it's still good to have cash. It's still a good thing. So I recommend having liquid cash on hand. Be ready just in case some crap does hit the fan. That's my recommendation to you guys. If you like this video, I would love to hear your comments. Like this video, but also comment below. If you think that there's something's going to happen, I'd love to hear your predictions as well. Guys, make it a great day.